What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is August 26th of 2020. Well, folks, I hope you are having a fantastic day wherever you are, and in today's video, I not only want to spend some time to talk about the recent correction we've been having over the last week and talk about what my current thoughts are in regards to price action and where we're heading over the next few weeks. Outside of that as well, though, diving into DeFi, surpassing $7 billion in total locked up assets onto DeFi protocols, and also just kind of getting an idea here of how we're watching the altcoin market at the moment. So we've got a lot of things to discuss. Let's just go ahead and jump right into it. And I thought the best way we could start with this video would be to take a look at one of our favorite data science models, the Bitcoin profitable days. Very simple data science model that I think really kind of contextualizes why I don't even care about this correction, why, if anything, I see it as an opportunity to add, and why it really puts things into perspective on how great crypto has performed as a market comparative to other markets, not only over the last decade as crypto came into existence as a market, but outside that as well, comparative to just other asset classes. And right here we can see that the number of profitable days for Bitcoin out of the 3,662 days in existence is 3,572. You do the math, you get about 97.5%. There's really only two periods of significant time, and yeah, you could technically say there's a third here, but broadly speaking, you really have two periods of time where you would lose out on buying Bitcoin. It's when we had the peak in June where there was absolute FOMO and hype, and along with that as well, back here during December of 2017 when your grandma was probably buying Bitcoin, right? Now, for the grandmas of the channel, leave a comment. There's no insult there. We've got people from all different types of backgrounds. I always remember this story. It was back when I was in Ireland. It was the first country I ever visited outside the U.S. and beautiful country, by the way, for those of you who are in Ireland. And we did our first meetup in this small city in Limerick. And there was this old lady. She was the first, she was the first person to stand up out of everyone in this case. I was thinking, there was 100 people in the room, and there was like a dozen people who asked questions, and I had to pick her. She just had this bright smile on her face, and she'd asked me, she's like, Nick, I already own crypto. What exchange, though, is the best for me as an Irish citizen to get crypto? And she listed off 3 different exchanges that even I hadn't heard of. I was just like, wow, okay. So it shows you crypto is for every age group from all different backgrounds. It really is a global phenomenon. So again, I would say, I think that contextualizes here in this moment that, we're still early in this, guys. Crypto adoption is so small right now. So we've got a lot of room to grow. All right, a little bit of a story to tell. But anyways, taking a look at the market here, we can see here broadly, most players in the market here over the last 24 hours are in red territory following Bitcoin, Ethereum, and XRP. We can see here that a lot of the plays here, some of our plays, as well as just the broader market altcoins, are generally down right now. And I want to go ahead and just talk straight about Bitcoin here, just dive straight into it and take a look at kind of the short to medium term here. And the one thing that I've always emphasized here is keeping your technical analysis extremely simple. And as always, I'm generally just going to be, or most of the time, I'm just generally going to be focusing on price. And take a look at this here. Again, one thing that many people aren't looking for is these certain types of technical lines that can act as support and resistance. Again, they're usually trying to overcomplicate things, sometimes overtly using the Fibonacci and all types of different things. And those are great. I do like to analyze price first and foremost, but I really try to avoid using a crazy amount of technical indicators. Take a look at this here. We've had this line here drawn on our chart here. We've expanded it, of course, right? We've drawn it out further. But this has been a line we've been watching of resistance, support, resistance, and also possible new support. And look where price is resting right now. Look at where the wicks bounced off yesterday. The wicks of the candle here. We got a nice solid rebound right off this line. And as we've pulled back from around $12,500 for Bitcoin, coming down here towards $11,350, right? This is looking like the kind of discount opportunities I'm looking for. Bitcoin's returns right now are not going to be, when we get these rallies here, right? Let's go ahead, we'll get the date and price range tool here, right? We can see here, nice 37% run up, 37.5%, give or take, right? And along with that, you're gonna have some nice substantial, 11, 12, 10%, 15% pullbacks, right? I know this should be red, but give or take here, you're going to see some kind of pullback on the gains. But notice here as well, the multiples on these kind of rallies are a bit smaller, like 37%. And along with that, the corrections are not as crazy as maybe some of the ones we've seen in the past that are usually 35%, 40%, 50%. And the reason for this is because we're not in the later phases of the cycle. Those kind of corrections we saw on Bitcoin, these kind of corrections, for example, where we had, I remember this very, very clearly, the first major correction that we covered on the channel of 41%, or actually more around 42% here from top to bottom, from 3,000, big even level that a lot of people were watching, down towards 1,750. These types of corrections come much later within the cycle. So we have to be patient on these. We're not going to try to rush these. We're not going to, again, try to expect that we're going to get these kind of multiples like we saw here, for example, from top to bottom here. We saw Bitcoin's price go up 236%. Now, in this case, this is what you would expect equities to do over a decade. But Bitcoin did it in 77 days. So again, we're going to start getting these kind of rapid accelerations later in the cycle with more substantial corrections. So don't expect that Bitcoin's probably going to go down to 8 or 9K. It's likely not going to be coming down to that historic line of support. And this is actually a new thing TradingView's doing. I apologize, guys, for this clearing the whole screen and kind of distancing from the chart. I really don't like this change. So hopefully they make this optional. But long story short, to show you guys what I mean, taking it to the weekly, I do not think we're going to come all the way back down and test the upper $8,000 range. It's not that I'm being like a perma bull. I just generally don't see it here. Again, in the sense of the last correction we had, nothing really substantial. I think it's just going to be a nice slow climb up here into Q1 of 2021 where we retest 20K, have a pretty substantial correction down to maybe 16K for profit taking, and then come back up, and then we start to kick off the next cycle. Nice steady uptrend, not too substantial of rallies, but also not too substantial of corrections. I want to dive in here real quick to take a look at Tezos. This is a good example of how I like to analyze altcoins here. We've got three key lines that we're watching: a support range, a kind of a mid-range here, and then along with that as well, resistance range. And Tezos here is playing very consistent. There's only really one anomaly here. But we can see here that it trades within this range quite well against Bitcoin. And this provides some great opportunities here. Looking for potential rebounds off of this range. Right, we weren't able to hold it this time around. But back here, we were able to get a nice little short-term trade. And outside of that as well, we have the support range down here. Nice range here for trades. But again, from top to bottom, if you just want to kind of contextualize it, right? This is nearly 60%, around 58% return here. And we've seen that in many cases, this can happen. Again, we're looking at the daily chart in a matter of 2 weeks. Pretty good if you can get it against Bitcoin. So again, we're going to be watching for things like this. I'm going to be watching Tezos here. I'm still holding a substantial position in it, but just wanted to share this with you guys. Now, some quick updates here. Just want to share with you all because we are going to be diving into DeFi. I just wanted to share with you all that through Digifox, we have integrations with not only Compound and Uniswap, but we also plug into some of the centralized finance players like Celsius. And Celsius has just bumped up the rate to 10.94%. Absolutely incredible. The best rate on the market, so by far. So I have to say hats off to Alex Majinski, to the team at Celsius. And if you guys want to get access to these, we're not doing new wallet generations just yet, but you can basically be put on a wait list for wallet generation to get access to not only Digifox as an application, but also predominantly to Celsius and buying a lot of cryptos through our fiat on-ramps. So definitely check it out if you guys are interested. This is a picture of the rates here, all the stable coins paying 10.94%. And then also some major DeFi plays like Synthetics, Chainlink paying 4.4%, 0x 2.96%. There's a few other plays here as well, but I'd have to scroll up in that case. I don't have the app here on my desktop. So again, key thing here, check out Digifox if you're interested, and download the app on iOS and Android. We've got a lot of users. I think we got a few hundred users on the wait list since we started it back about a week ago. So very, very excited. And if you guys are interested as well, you can always consider investing in us through WeFunder, whether you're a small investor, large investor. We've opened it up to the crowd because we want to be owned by the community. And I really think that in the long term, for any kind of DeFi or crypto project to really succeed, it's going to have to be owned by the community from the get-go. So anyways, diving into here, I want to go ahead and spend a little bit of time about decentralized finance. DeFi has continued to climb the ranks here. As the markets have pulled back, we've actually seen total value locked, or TVL, one of the major metrics used, continue to climb here to 7 billion, the big even. And the key thing here to watch, again, I've always emphasized that I think TVL can be a bit misleading because market value can rise. But in this case, Ether still climbing. Bitcoin still roughly holding here towards its highs, right under the big even of 50K Bitcoin locked in DeFi. But the ETH here, again, is the major metric. Seeing how much of the ETH network we can get locked up in DeFi really tells us the story of how DeFi is expanding. Now, an important thing to keep in mind is that at the end of the day, we're constantly seeing most of this capital go towards a few select protocols. 6 projects own 90% of the overall locked up basically value within DeFi. These are your major deposit pools like Compound and Aave, and along with that as well, your decentralized exchanges like Curve, Uniswap, and then also a few other emerging players as well in the space. Now, the key thing I want to emphasize here, right? We can obviously see Uniswap has been having some great natural growth here, up to nearly $300 million in assets locked up here and continuing to steadily climb even as valuations are pulling back. And along with that, we have a new player here, which is from OneEdge, our OneEdge exchange, which is known as Mooniswap, basically kind of copycat protocol that modifies a few things, taking in $123 million since it launched back on August 10th. And just here, really over the past week here, from August 19th to August 26th, right, we're seeing here that value has gone from 15 million to 123 million locked up. This is incredible stuff, guys. Now, I want to emphasize one thing here. If you take a look here at TVL, in this case, or total value locked up, we have a new leader in DeFi, and that's Aave. Now, as you guys know, I've talked about Aave before. I've met Stani, he's a good guy. I think Aave is exploring a lot of interesting things. For example, bringing in tokenized, properties and different types of assets that are in the real world. And I think that's very important with DeFi. There's one thing that's important to understand about Aave as a protocol here. If you switch over to total ETH locked up, Aave drops down to 6th place here in this case. And it's important to understand that, yes, there's 2 things we need to consider. One benefit to Aave is that being a deposit protocol, you have a lot of different stable coins. You have a lot of USDT, you have a lot of true USD, USDC, and also other assets like Wrap Bitcoin and DAI, and also some altcoins, right? But the major thing here that's misleading a bit in the sense of the statistics is the ETH Lend or Lend token in this case, which is making up nearly about $400 million of the total collateral here. And again, I think that that's important to keep in mind here. And it's why I personally believe TVL is not going to be the long-term metric we want to turn to. We want to measure how much of the major assets like ETH, Bitcoin, or maybe even, for example, crypto assets, excluding the base token of the protocol, again, I think we should also factor in here, ETH and BTC themselves can just be misleading. We want to see stable coins. I want to see crypto assets in this case. And I want to see the general metric here in this case, not only to more broadly measure these crypto assets, but also in some cases as well, be able to see on an actual numeric basis that we're increasing ETH here, right? That's what I want to see in these protocols, right? But all in all, right, Maker still the king here in regards to the actual Ethereum locked up here. BTC as well holding relatively high. And again, decent amount of DAI. But all in all, really exciting stuff, guys. I think it's amazing. Again, I don't really have a worry about a lot of the DeFi being concentrated in a few projects. Value is going to drive towards the most reputable players because liquidity tends to attract other liquidity, right? So anyways, I think that's important to keep in mind. Now, if you're just interested in getting into cryptocurrency markets for the first time and buying maybe your first cryptocurrencies, perhaps maybe you're in Europe, I'd recommend checking out Bitpanda Pro, our sponsor here on the channel. They're not only a great exchange to get started out, but they also give you pro features in this case that allow you to trade into a variety of different fiat on-ramps or different fiat pairs and a wide range of cryptocurrencies that you know and love. So all in all, everyone, that's it for the video. Again, keep in mind these key data science models. Keep perspective in mind. Don't worry about the small bumps because they're nothing more than that. They're small bumps in the market. They're parts in the greater cycle, and that's why we're focusing on the long term. So I hope you guys are having a great day wherever you are. If you like this video, drop a like, consider subscribing and hitting the bell icon if you haven't already so you don't miss another video. And all in all as well, big thing that I recommend you guys checking out again is Digifox. It means a lot to me. We've got a lot of people coming on. It's really, really exciting. So that all being said, I hope you all are having a fantastic day wherever you are, and I'll see you all in the next one. Take care, everyone.